Hello, everyone, and welcome back to another episode of the Market Outlook series. I am Kavita Agrawal, the founder of EXP. And today we are here to talk about what has Nifty done so far. We know it has breached the level of 25,000, but is this momentum going to continue, or are we headed into a correction? If it is a correction, then what should you do? What should your next steps be? And if it's going to be a strong momentum, which are the sectors that are going to rally? So we are going to take a very exhaustive look at all our indices to kind of determine where the momentum is building up. We'll be doing it together. And I also have a special announcement for our members here, and I'm very happy about this. I hope you'll stay till the end to hear that. After my announcement and my analysis, we will move forward with your queries. So if you are a Zoom participant, you'll be welcome to come off mute and ask your query, interact with me, or if you're an audience member, then I'll request you comment in your general queries. But if you have specific stock queries, then you please fill up the stock request form, because as per SEBI, a registered research analyst like myself needs to maintain a record of all publicly spoken stocks and levels and stuff. So only stock requests submitted through the stock request form will be entertained. Otherwise, stock requests in the comment will not be entertained at all. Let's get going with our session today. Now you're able to see my screen, everybody. So let's get started with the 3-minute time frame. This is the 3-minute time frame. Now, what are we seeing here? We saw a very strong rally all the way from 25th July to the peak that was yesterday. We saw a nice percent rally, or around 800-point rally. When this rally unfolded, the RSI was in a very nice, beautiful, positive range shift until it showed this negative divergence here. Actually, that's not a negative divergence. But yeah, this is the positive range shift, right? Positive range was observed on RSI. And then today morning, there was a gap down opening. There is some structural breakdown, I would say, with the 3-minute time frames RSI of 25 period, spending some time, significant amount of time below the level of 40. This is a structural breakdown. Also, this previous high of 24,850 has been breached, which is not very good. So yesterday in my analyst comment, which I share after market every day, I mentioned that 24,850 is an important support. So today the market has opened below that. So that is a little bit of a red signal, I would say. The next support, however, is 24,600. But there is a good chance that tomorrow morning, because of the very strong positive sentiments overall in the market, there may be a gap up opening by tomorrow, obviously, the next trading day since today's Friday. There may be a gap up opening, but I think 24,850 will continue as a strong resistance, and the next support is 24,000. Now let's move on to 15-minute time frame and draw some insights here and just clean this chart up. I was taking the advanced swing trade training lessons yesterday, so that's why you were seeing like lots and lots of drawings. I was trying to explain different concepts. So here, if I draw, say, this trend line just to capture these few peaks, what I would say is that there has been definitely a truncation. So if I just draw this internal trend line, so he's been a truncation in the sense that this upper trend line, which was tested earlier on 18th of July, has not been tested. Price continues to move forward, and I think it's on the trajectory to definitely test this light blue line, which is the 20 EMA of the daily time frame, which again coincides with our level of 20,600, right? The reason why I was convinced that we are going to see a correction, and I was convinced about it yesterday, is because there is a negative divergence. Sorry about that, guys. I think we had some issue here, but it's been resolved now. Sorry about the bad view. All right, moving on. So what we are seeing here is that our negative divergence had appeared on the 15-minute chart of Nifty. And because of this, there was a clear signal that the strong momentum has subsided. That's about the 15-minute time frame. Now you can see that here we saw a move below the level of 40 as well. Tiny little circle here. Move below the level of 40, and a twin peak has been forged, right? Also, the volume activity has been high on the correction. So that is also something that's not very convincing. So both 15 and 3-minute time frames, I say, would be a little bit on the weaker side. Coming 5-minute time frame, if you're probably seeing my chart, you already know what I'm going to say. Negative divergence, which means a little bit of correction should be expected here. And it is healthy for the market to take some correction. So when the momentum was very strong, RSI was shy of coming below the level of 55 here. But then this massive correction that we saw took the RSI down, which is still within the bull range. But the next rally that followed, unfortunately, did not surpass, even though it was a pretty good rally, yet the momentum was not strong enough, and more towards the last part, the momentum waned off, showing that basically this level, 24,850, is a significant resistance or support for the market. So since it's a very important resistance, let's mark it with our support resistance rectangle. Excuse me. So this is a very key resistance now for us. And like I said, the support continues to be around 24,550 to 24,600 for the market. But what if this breaks? So where do we stand now? Now, if I want to do a pure Elliott Wave count on this, I would suggest I would take this as the beginning of wave 1. I will ignore this extreme move. So I think this was wave 1, this was 2, this was 3, this was 4, and this was wave 5. And this is the wave 5 of the primary bull run 1 that has begun since the election day, that is 4th of June, right? So this is one entire wave broken down into 5 subwaves. And now the correction that will ensue, I think, it should not go down below the level of 24,200 in my opinion, right? Elliott Wave count also suggests that the correction typically tends to end within the range of the wave 4. So this is the correctionary wave 4. So now the ABC correction that will unfold can end within the range 50 to 24,200. So below the support level. So let's draw our support level of around, we said 24,550 to 24,600. So that is 24,550. Let's change that text color to white and opacity 100%. And let's also mark this level, which is 24,200. And let's put it on the chart. So there we go. So these are the 2 support levels that we will look out for on Nifty in this leg of correction. And I expect this to be an ABC correction. So next couple of weeks or 3 weeks, 4 weeks, I am expecting a lot of volatility in the market. So it's very important you be careful. So my strategy, like I also said last week, and I have been indicating this in my market analyst comments at the end of the day, that my strategy or my approach has been more towards profit booking. And even for the active ideas, we maintain tight stop losses and ensured that profits got booked before this correction came. So now the idea is that we have a lot of cash, and now let's start analyzing to see where potentially we want to participate in this correction. I have no doubts about that. If we take a quick Fibonacci measurement also, since the underlying bull trend is very strong, I don't expect the correction to go beyond the 38% mark. So the 38% mark becomes our next support level for the market, which is around the level or level 24,050. So we have 3 important support levels. Coming back to our daily time frame. Daily time frame is making a very small and simple suggestion that the underlying trend is still bullish, and we can continue. We can expect the bullish momentum to definitely continue, but it is going to take some correction. Now, if you look at this trend line trajectory also that I've drawn here, this trend line trajectory basically suggests that the price goes and comes back to support, comes back to support. So again, 24,550, 24,250. If we also draw another, if we clone this and draw another one, this could potentially be support, but that trend line is not something that I will use for the daily time frame because it is drawn from the short-term perspective. If I want to do my trend line analysis on daily, then I will zoom out a lot more on the daily chart itself, and I will use the larger time frame for drawing my trend line. So there we are seeing a breakout of this. See, I use these internal peaks to draw a trend line. I cloned it on this peak here. And if I zoom in here, you will see that the high that is forged lies exactly on that trend line. So this is why I prefer to draw trend lines using these important trajectories, right? So see, what is basically happening is that Nifty has definitely started to move above level by level, it's going higher and higher up. So it consolidated in this zone of the trajectory for some time, gave a breakout, moved up. Now what it will likely do is come back to take support. So it can test the level of 24,250 again. Because see, it's not going to, hopefully, it's not going to come down vertically. What it's going to do is, like I said, it's going to be an ABC correction. And there's going to be associated volatility. So I expect the correction to look something like this. So we can expect like a month of, and then I expect that the strong bullish momentum in the market is going to continue for another 5-6% of upside. Let's not get ahead of ourselves at this stage. At least 2-3 weeks, maybe 4-5 weeks, we are expecting lots of volatility in the market. If you are a short-term swing trader, you need to have a more protective stance towards your capital. With that, let's move on to Bank Nifty and do the same analysis. I am going to remove the drawings so that we can take a fresh look. Again, bringing my trusty trendline tool. This looks like a pretty good trend. And again, I can see that even the extended trend line has been tested on Bank Nifty. Okay, and here if I clone on these peaks, basically this range has been tested and broken. And if I look at the RSI of the daily time frame, is showing a negative divergence to me, which tells me that we can expect correction. Now, if I go down to the 75-minute time frame, this is sinking globally, but let's clean this up and draw the trend lines again. That usually doesn't happen, but sometimes where things do happen. So let's just redo our trend lines. Let's go to the weekly and redo the trend lines is what I would prefer to do. Let's go to daily. All right. See, with trendline drawings, it's not an exact science. It's eyeballing to a great extent. So that is why I am not shy of removing all my trend lines and redrawing them. There's absolutely no harm in that. So here I can see that this trajectory is lending some support. It's also been breached. It's trying to sustain here. And again, from Fibonacci count perspective, ignoring this extreme sentimental move, I can see that the Bank Nifty has already breached the 38.2% retracement level. So usually if the first wave has broken the 38.2% retracement, then what I've observed is that the 78 to 62% retracement zone becomes a very important support. So for Bank Nifty, I am looking at strong support coming in at the level of around 49,500 to 50,000 range, right? So let's draw our support here for Bank Nifty. So 49,500. I prefer taking like round numbers for this. So I'm very uneasy with the way banking charts are also looking. So I would strongly recommend everyone to exercise caution there. We can see there was a negative divergence right where the Bank Nifty peaked out. And Bank Nifty, by the way, peaked out before Nifty did. So if you want to take a comparative look of Nifty versus Bank Nifty, you can click on this button, which allows you to compare another symbol. So here I'm going to draw the Nifty chart and I'm going to right click on this, and instead of regular, I want this to appear in percentages. So when we look at things in percentage, basically it will plot both of them on the same scale. So what we are seeing is that 3rd of July is when Bank Nifty peaked out, but Nifty went on to create its new lifetime high. So this is called a divergence. So if you are aware of Dow theory, in the Dow theory, it is clearly stated that if two major indices don't top out, basically if there's a divergence between two important indices, that is a leading signal of potential downturn in the market. So I'm not saying this is going to be the beginning of an outright bear market, but it is time to exercise some caution, especially for short-term investors. For long-term investors, I think this will be a great opportunity. The month of August and September is going to be a great opportunity for making some very good picks. That is what this chart basically is telling us. Moving on. So today I want to take a little extra time to discuss this. I think it's time that we start breaking into this model. So this looks very scary, but all this does is compares the RSI and the line chart of different sectors and gives me a very one-screen view of that. But we will move forward with chart one by one. Okay. So first, let's look at CNX Finance. So what I am seeing here is basically CNX Finance. So this purple line on all charts that you see is going to be the 75-minute RSI. So 75-minute charts, RSI, okay? 25-period RSI. And the other colored lines is going to be the index. Now, what I am noticing on this is that the CNX Finance had given a negative divergence on the 18th of July. This doesn't make me comfortable, and I've already been warning you that the CNX finance sector as such is not looking attractive for fresh entries. In fact, most of the stocks have given strong rallies recently, and I think it's time that you give breathing room to the stocks belonging to financial services so that they can take a correction. Next stock or next sector index that I want to look at is the CNX. Let's look at CNXIT. What is CNXIT doing? CNXIT is also showing a bit of a negative divergence here. And I think it has rallied quite a bit. In fact, just today on my Telegram channel, if you see, when I was doing my usual analysis, I came across this LTIM. And I issued a warning to everybody that LTIM chart is looking very bearish because I think it is currently, LTIM from a long-term perspective is a very good stock. But right now, I think it is going through ABC correction. And if you're aware what an ABC correction is, basically this is what a ABC correction looks like, right? So LTIM is in this phase. So the entire wave C is pending. And I think in the unfolding of the wave C, the stock can go down anywhere between 20 to 30%, right? So that is the warning that I have given. Things about us, to share it in my Telegram channel. So if you want to join my Telegram channel, you can visit Trade with Kavita. I'm also dropping the link in the comment on your platform for you to click and join. But just one little bit of warning that if you write Trade with Kavita on Telegram, right, you're going to see lots of fake channels with my pictures. So be careful and make sure you're joining this channel only, Trade with Kavita. This is what it appears like. Let's move on. CNXIT also, from a short-term perspective, not attractive anymore. CNXIT gave very strong rally, and we've already taken advantage of all of that. CNX Finance and Financial Services outlook is usually quite similar, so we'll not get into that details. Let's look at Realty. So this is the Realty sector, CNX Realty. You can see the tiny little marking here. Now, what are we seeing on the CNX Realty? I think this sector has stopped rallying on 18th of June 24. So actually for Realty specifically, I want to do this. I want to look at the chart itself because this sector has a very strong underlying bull trend unfolding. But from a short-term perspective, it's been in a bit of a correction. So here we had noticed a negative divergence because of which back in June and July, I told people be a little careful in making fresh positions in the Realty sector. Might take some correction, and that correction seems to be getting over now. 10% the index has declined. The RSI of the daily time frame has come down to the level of 40, close to the level of 40, which is the support zone for bull market RSI. So CNX Realty, what I'm seeing is, so what I want to do is I want to actually clear up all the lines, all the old lines, and I want to capture the more recent trend. So this is something that I've started doing more recently, and this helps me stay focused on the more recent trajectory, which I am liking and preferring more. So I can see this is the trajectory, and we are seeing some acceleration and deceleration. So here there was an accelerated trend which decelerated with, this was a wave 4 and this was wave 5. So CNX Realty actually can, I think, see a little bit more correction here. The reason for that is very simple, that if you do a quick Elliott count, this looks like a wave 1, this was 2, this was, I think, 3, this was 4, and then this was, I think, 5. So now, most likely, it's going to go into ABC correction. A seems to be done. 5 wave A seems to be done. Now, there can be a B wave. The thing is that while it is an opportunity, it is some potential upside, but the nature of the B wave is not very reliable. So you can expect it to be choppy, but the Realty sector can offer some, I would say, opportunity there. So what I will do is I will open a note and I will take this into, I will just note it on my screen. So Realty sector, I am moving on to the next one that we have, Infra. Let's take a look at Infra. So what is Infra showing? Infra is showing strong trend. Infra also calls for individual attention here because something interesting seems to be happening. So Infra has given some rally and daily time frame, however, so this is what this is showing is that there is a negative divergence, but the sector overall is not it's not bearish, but it's also not super bullish, makes it risky. So if we look at the 15-minute time frame, see 15-minute time frame is also showing negative divergence, which is very short-term weakness. So if I have to see what the trend is doing here, let's draw this. This looks like a fair trajectory and then clone this. Yeah, so I am expecting a little bit more correction to unfold here. Basically, this is the internal trend line, which should get tested. So when the infra sector basically comes down back to the 20 EMA, which is this light blue line or this trend line, there's a confluence here, test and reversal, then probably I'll look for fresh entry. So again, even the infra sector is where I will start analyzing stocks. I'll pay more attention to those stocks because they can potentially have better opportunities for me to participate in. Pharma sector. Now, the pharma sector is, I think, experiencing a very strong bull run and is definitely a buy on dip in this current market. Healthcare sector, same, very strong bull run and a potential buy on dip candidate. Next, we have the metal. With respect to the metal index, I think the 75-minute time frame suggests that more correction can be witnessed. So I am not very keen about that. The private bank sector is a mixed bag. Be very cautious in participating there. PSU, what about PSU? I am not at all willing to touch PSU sector right now from a short-term perspective. PSE sector has started to show negative divergences, but usually the PSE sector you will see is a super trender. So these negative divergences, the thing is they tend to take longer to get realized, okay? So occurrence of a negative divergence doesn't mean that you'll start seeing correction immediately. It takes how much time will it take to realize depends upon a sector's or a stock's personality. For the PSE sector, it takes a lot of times, but I am not going to err on the side of caution. So I will not be very keen to make fresh positions in the PSE sector because when this phase comes where a negative divergence has come, but it's not been realized, volatility can increase a lot. So like NBCC, we've attempted twice in the last month to take position. Both times it's given upside, but not before triggering the stop loss. So that makes active management kind of difficult. Metal I've already discussed. Media. Now, I think media sector is interesting. I think it has created a bottom. Let's take a look at CNX Media. CNX Media has given a strong rally. We discussed this index in details last month. It was actually in one of the sessions also. It was the sector of the week because I was expecting some good upside. It did give some good upside, but on the daily time frame, I'm seeing it is a little shy of going above the level of 60. The RSI of the media sector is a little shy of going above the level of 60. Plus, it has also come very close to this. I would say this is a pretty important resistance zone. It has come very close to that. Even though I still have some media stock positions, I'm exercising a lot of caution there. If the media sector can break out above 2200, then I think we can expect the rally to basically continue. So we have commodity, consumer durable. Let's look at auto. Auto sector showing very strong underlying trend, and auto stocks like Maruti, if you see, has given very good rally, and I do expect the auto sector rally to continue. FMCG, I am not very confident about FMCG. Massive negative divergence on 75-minute time frame absolutely shakes my confidence. Energy sector, amazing rally unfolding, and expectation is that the rally is going to indeed continue. These are some of the strategic indices. We can ignore these. And now let's also take a comparative look. Let's take a comparative look on the indices, the index chart, intersector index chart. So here, if we see from the opening of Monday onwards, energy sector has outperformed this week. The realty sector has gone into massive correction, which is fine. PSU bank is close behind. IT sector is also taking some correction. I think auto sector is good. Buy on dip opportunities are there. Pharma and healthcare continue to be winners. PSE sector, you need to be very careful. CNX service. So CNX services, let's take a look. Yeah, negative divergence. I don't like it, losing momentum, and just one look and I can tell that I don't want to touch this sector. Infra and everything else we have discussed. So this is all for the formal discussion that I have. And now for the big announcement. So I'm very happy to announce the launch of my new website, EXP. This is a fresh new look. It states the vision and the mission of the company. And if you don't know what EXP, it is the company that I have started. And the whole idea of this company is the name EXP itself comes from experience, expertise, and exponential, because I am basically leveraging my own experience and expertise in the stock market in the field of technical analysis to hopefully bring and deliver exponential growth for everybody who comes in contact with me. So if you want to know more about me and my background, feel free to check it out on this website. You can come across some customer testimonials. And of course, if you want to explore the services, feel free to do that. Now, because to celebrate this launch, I am also providing a 15% discount on all my services, all my subscription services, like Trade Together program, which is a short-term swing trading program, advanced swing trade training program. That is, if you want to learn swing trading from me, all this analysis that I do twice a week, if you want to learn all that for yourself, then you can enroll for this, or long-term plan if you're a long-term investor, right? So how do you avail the services? Just go into my Telegram channel, and I've already made the announcement on the Telegram channel with the discount code. So you can use the code Nifty on any of the subscription services, and you can avail the discount. Now, if you have questions, if you want to know more about how these services can serve you or your short-term, long-term goals, just go on to this button and book a call with me, and I'll be more than happy to walk you through the services and take in your profile, understand, and help you out with stuff. So I will also paste the link to my website and the discount code NewRally15, so that if you're interested, you can go and avail the same from the website. With that, let's now move towards interaction. I invite the members who've joined us on Zoom. I can see we have around 7 participants today. If you have questions, feel free to come off mute, or you can also paste it in the comments, and I'll be more than happy to assist you. So we have with us Rajji, who asked for the analysis of VST Industries and Gopal Snacks last time. And he's saying that the levels that I gave him were exact and the stocks reversed exactly from there. So I'm glad that I was able to help you out. Now we have Akhil with us, who's asking for the analysis of. So let's take a look at DLF. So what I'm seeing on DLF is that a strong trend is definitely present. So I want to also clear the older trend lines, and I want to draw trend lines taking into consideration the more recent price trajectory. So this is what I'm seeing. So here there's been some correction. Let's also place one level here. And now to take a look at the support resistance zones. Support resistance zones, what are they suggesting? That we have a strong support here, and the stock seems to have corrected. Also, it has started making higher highs. DLF is also on 75-minute time frame. I can see positive divergence right here, and now a positive range shift. It looks set for fresh new rally, but DLF is a very volatile stock, so a very short-term position is not recommended at all here. Your stop loss is, so well, the stock is coming down indeed back to this support zone. It is there, in fact. So I think this is a good entry zone from 816 to 845. And here I can see 800 it's a risky stop loss, but I also don't want to keep a very big stop loss on the stock because of its very volatile nature. I would rather have my stop loss triggered and re-enter the stock rather than keep a very big stop loss and see that get triggered and the stock continue downwards. I don't want that. The stop loss here is around 4-5%. And from a target perspective, I think if a new rally begins, then we can expect the retest of the previous high. So from the current market price, the upside is around 15%, downside is around 4.5-5%. So risk reward ratio is exactly 3. So this does make a good buy on dip opportunity. And this is the dip that you want to enter at. So that's DLF. That request came from Akhil. Now, Amol on Zoom, he's recently joined the Trade Together program. So he's asking whether it's advisable to book CAMS, Computer Age Management Service Limited. Let's take a look at CAMS. I can see very strong 20% move unfolded here, but let's delete all these drawings and let's draw them fresh. Weekly time frame does not have enough definition to help us out, but the daily time frame does. So I'm going to connect these lows and I'm going to clone this trend line to find my price trajectory and the levels within the trajectory. And this looks like a pretty accurate representation of what the stock is doing. I think you are absolutely correct in your question. You should book profits because I think this is the uppermost trend line. This I will not count really because that kind of I have my reasons. It's a little complicated, but I have it. So I don't think this rally is going to continue. The stock needs to take some correction. So I think it's better for you to book profits. But the thing is that it's already off the top and it's already fallen nearly 12%. It's now very close to its support. So instead of booking profits right away, set your stop loss at around 4243, 4,243, and wait for that to get executed. All right. So Mohit has raised his hand. Yes, Mohit.
Hi, Kavita. I have observed that in the US markets, a very significant phenomena is rate cut. Like market rallied, I think day before yesterday, because rate cut was expected. Then again, it was not there. Then again, market fell down. So, does it have great effect on Indian markets? And how do you see? Do you feel that it's a affecting factor for the market direction?
It is an affecting factor, but you have to understand that it does not have a very strong correlation. Some correlation does exist, but it's very weak. For instance, if you see the US market has been declining since 11th of July, but that is not true for the Indian market. In fact, the Indian market went on to achieve or surpass the level of 25,000 after 11th of July. So the Indian market's momentum is extremely small, and right now it is not behaving in a correlated manner with the US market. That being said, specifically with respect to the US market, I think NASDAQ has reached a very important support level of the 100 EMA. And on the 75-minute time frame is showing a positive divergence. So I am expecting strong recovery to come back to the US market. But whether that upside is going to buoy the Indian market or not is something that we cannot really promise. Because again, if you want to study the correlation of the US market and the Indian market, I would suggest you add the Nifty symbol to NASDAQ chart or vice versa. Change your scale from logarithmic to percentage. And then you study historically how strong has the correlation been. And you will see that there are a lot of times when the correlation absolutely breaks between the two indices, right? So while yes, the rate cut is a significant phenomena, and while it has led to a lot of volatility in the US market, how that is going to affect the Indian market is not something that I can comment on very reliably. So my approach would be to stick to my very simple price action analysis on chart of Nifty to reach the conclusion of what to expect, what not to expect.
All right. Could you please analyze CrowdStrike or Nvidia stock?
So personally, with respect to Nvidia, I am super bullish. And in fact, some of you might know that I trade the US markets, and Nvidia is a stock that I will continue to accumulate no matter where it goes, because the kind of monopoly that it has, if you look at the long-term trajectory of the stock, I think it has just started to come into a rally. And I think the rally is only going to accelerate. So right now, the little bit of downside that we are experiencing is actually a pullback. And I don't expect it to go beyond $96. If it does, I will continue to further accumulate the stock. So that's that for you, Mohit. So we have Sahil also on Zoom with us, and he's asking for the analysis of Sequent. So let's take a look at Sequent. There was a time when I used to trade the stock actively, but then for some reason it just fell out of my radar. And this is why. Very cyclical stock, very volatile. So this is the trajectory. And I can clearly see it's in a strong correctionary phase. Right now, it has taken resistance, and I believe it can continue declining. It doesn't have a strong underlying bull trend, I would say, because there was a time when it was moving up strongly, but then it gave up all of that gain, moved up a little bit more, went back to its resistance, and then started to fall again. So here, if I see, I think this was a strong support, which it did not respect at all, came back down, touched this support, went back up, again, retested the resistance, and I am seeing divergence. It's still building up. 75-minute time frame is definitely has a negative divergence built. So I would expect downside here. I wouldn't suggest a long position at this stage in the stock. All right. So for Sahil, it's again, take a look at another stock, that's Hikal Limited. Let's see. So we also have some YouTube members with us. Welcome to our YouTube members. So if you have any questions, feel free to ask. If you're a YouTube member, then we will also be prioritized. So let's take a look at, I can see a potential rounding bottom, and this has started to make what I would call higher high, higher low. This was a resistance, now is acting as strong support. There was some bit of negative divergence, but I think this correction does it. Fine, superb. Now, what do we have here? So 15-minute time frame. I think this is looking attractive for potential entry around 330 rupees. It can come down as much as 315 also. So any stop loss that you want to maintain should be below the 315 support, so around 330 rupees, right? So this was the negative divergence, but I think it has already played out with this bit of volatility here. And the underlying trend looks strong. I would expect this stock to rally to the next resistance based on this peak here, which is around 407. So from the current market price, that's a 25% versus a 5%, pretty attractive risk-reward ratio. So Rajat Ji, who's also a Trade Together program member, wants me to take a look at RHIM. All right, let's take a look at RHIM. So what do we have here? Strong underlying uptrend, but currently stock is in correction, no doubt. Where is the support zone? So this support zone was here, which was expected. This I don't think is going to get to visit all the way down. So the next support is this tiny little peak, but also pretty far. What is the RSI saying? So RSI is showing loss of momentum. So that is why the stock is in a bit of a downward movement, but the underlying trend is good. RHIM is definitely good for long term, but not so much for short term. Yes, and the 75-minute also corroborates that view, because if you look at the RSI, level of 30 is being butchered repeatedly. So I am not comfortable with the way the stock is looking right now. And I would want to wait for a level of maybe 420 to be achieved on the stock before I consider this. On daily time frame also, negative range shift is playing out right now, which tells me that the stock can experience more pain or more downside. I would expect more downside on the stock, not a good candidate for long side participation. It says that the buy price is 640, small loss, and the multi-base is 245. I'm not sure what you mean by multi-base here, Rajat. Would you care to elaborate, please? Looks like Rajat is, I can see Rajat in the meeting, but okay, fine. Let's move on. Indus Tower. So Amul is asking for the analysis of Indus Tower. This further correction is whether further correction is expected in Indus Tower or not. Let's check it out. I don't think Indus Tower has corrected at all, but I don't think now is the time when you should consider for fresh position in the stock, because I think Indus Tower has finished a 1, 2, 3, 4, 5 wave. The daily time frame is showing a negative divergence, and the last leg of rally absolutely lacks volume participation on the upside. So this is now time for actually some profit booking in this towers and not fresh position at all. I would this stock to correct as much as the first support would be 365. It could also go down to 320. So until and unless it takes that correction and gives me a strong gives me a bullish signal, I would not be looking at Indus Tower for long position right now. All right, let's take a look at Deepak Nitrite for Mohit, who's again with us on Zoom. And I can see that none of our YouTube members have asked us any questions. So let's take a look at Trite. Deepak Nitrite. So this I am very bullish on from the long-term perspective. For short-term trading, this stock is a little bit volatile, but from the long-term perspective, it's looking very attractive. I was just studying the stock some time back. I think it's given a nice little correction after a very strong bull trend. And I expect that this bull trend, at least one more leg similar to this kind of rally, can be experienced here. And it is just beginning to create a new lifetime high. So I am personally waiting for a pull back to the level of 2,700 for fresh entries in the stock, which I think is very possible here, because the full-fledged momentum is not launched yet. So this strong rally of 50% that it has covered, this will experience, in my opinion, some pullback. So that will be a good entry opportunity. So Mohit, since you've not mentioned short-term or long-term, If you've bought the stock for short term, I would suggest you book your profit. But if you bought it for long term, then if the stock comes back to your entry level around 2,700, add more to your position. I think this is a very good stock. So short term, then I would suggest you book your profit. Last stock, let's take a look. So Aster DM actually reminds me that, guys, if you want to learn technicals from me but you don't want to enroll for my sessions or my classes, what I would suggest is you go to my YouTube channel that I'm showing you on the screen. And on my YouTube channel, you will see this thing called join. So if you join my YouTube membership, then I have created this playlist, which is basically called Let's Get Technical. No, sorry. It's for basically learning technical analysis concepts and practices. So these are member only videos. So you can join my YouTube membership and you can view these videos. It will help you learn. So just yesterday, I uploaded a video of Aster DM itself, where I have done a detailed analysis of the key rallies. And this is the drawing from that. So let me just clean up some of these drawings and do fresh analysis for you guys. Let's delete all of these date and price range. Let's delete some of these rectangles. And also let's delete the trend lines because I want to draw fresh trend lines for you all. I don't want to delete my alerts or my arrows or my info lines. That's it. All right. So you can ignore the rest of the markings. So Aster DM is one of the stocks that was also given to my participants of the Trade Together program. And this is where my target was. So exactly the stock hit the target and started into strong correction. But I think now it is closing into a point where it can start giving fresh rallies. So let's go full screen again on this and take a bit of a look. So weekly time frame suggesting that the underlying trend is very strong. But I also want to delete these trend lines and yeah, I want to delete those and let's draw some fresh ones. So see, within this trajectory, the stock has come down exactly to the lowest point, turned up and with strong volume. So it's been showing volume pickup since the price has started going up, and coincidentally, that happened exactly from the support of the 500 EMA. See, this is confluence of lots of supports. I think now, because the overall market, I'm expecting some downturn. I'm expecting a pullback to come, where I've already placed a buy order for the account that I manage. And I think this is looking very attractive. Now, another very interesting analysis that I actually did yesterday was I asked myself that if I wanted to say participate in the next leg of rally that is going to unfold, which is suppose going to look like this. If I just want to study this entire trajectory, in the sense that what would my activity have been in terms of entries and exits? What would that have looked like? What would my support levels be? So if I want to study this, let's turn on the logarithmic chart and zoom in, right? See, this stock has a very strong tendency of coming back to its previous resistance to take support and offer amazing entry points. So if I clone these levels and start placing them near the previous peaks, you will see every time it gives a breakout above the previous peaks, it comes back to retest that as a potential entry zone. So this is a very strong observation, I would say, about this stock. And this is actually true for a lot of stocks. And this is a concept that I, in details, also cover in my advanced swing trade training program, if anybody is interested to learn that. So again, see, peak, breakout, rally, pullback. After the pullback, again, fabulous rally. Again, this peak, breakout, pullback, multiple pullbacks. So here we can see pullback all the way to the internal peak. But then the rally continued. So the previous peak repeatedly becomes a very good entry opportunity again and again. Here also, this internal peak became a very good entry opportunity. And once the breakout occurred, every time the stock breaks out, it has a tendency to come back to its previous peak, give another entry opportunity, and continue its trajectory upward. Why am I doing this study? Is this creating hindsight bias in me? This was a question that I received in the class when I was teaching this concept. This does not create hindsight bias because right now you don't have any opinion. What this is called is doing price action analysis or past price study. Why do you want to do that? Because it helps you understand what is the tendency of the stock. What kind of movements does the stock give? If you are preparing to participate in the next leg of rally, you want to know whether you want to buy and hold, which is what I would do if I was trading the daily time frame, or whether I want to play the swings. So buy and hold in this stock during this entire phase would have given me, say, 175 or 170% rally over a year's time. So next time when the rally unfolds, now obviously no guarantee that the rally will unfold exactly like this. So I will have to see what trajectory it catches and how it trades. But basically, this does give very attractive swing trade opportunities. So if I can swing trade my way and capture more than the 170% rally. So if you calculated all the swings that are possible through repeated entry exit, the best case scenario will show you that you can make easy 220%. Now, whether that will practically be possible or not is something that will actually be determined by your skill set in swing trading. So that's a very long answer to your short question of what Astadium looks like. And with that, we will wrap up this session. I'm a little out of breath, but I am very grateful to everybody for joining in the session. The session's recording will be uploaded on YouTube as always. So if you want to revisit the levels of Nifty, Bank Nifty, and all the other sectors that we've discussed, don't worry, just hop over to my YouTube channel and make sure that you. Thank you so much for joining in, and be sure to join my Telegram channel. Don't forget about the announcement that I made that we have a new website and we are celebrating that with a 15% discount on all our subscription plans. Use the code NEWLAUNCH15 to avail the discount. So thank you for giving me your time and your attention. I will see you again on Wednesday at 5 p.m. Until then, namaste, everybody. Thank you so much for joining in on Zoom as well. Appreciate you taking the time.